Ben, thank you very much for joining us today. You and your team at Oceanmole have done a lot of work on the geopolitical aspect of uranium. And when you look at the geopolitics, you got to be aware that Kazakhstan is the world's largest producer, controlling 45% of the world's production. Canada would be number 2, 20% of the world's production. And I kind of look at this and I want to compare it to OPEC, which is made up of 13 countries, and they control, I believe, 40% of the world's oil production. What are the ramifications for U.S. utilities or anyone else in the West for being reliant on uranium that comes from Kazakhstan?
Yeah, thanks for having me, Jimmy. It's great to meet you finally. I think that there's a variety of sort of ways that we can look at this. I think that ultimately, Kazakhstan, as you mentioned, is almost a monopolistic producer in uranium. And I think that ultimately, the US has built up a reliance not just on Kazakhstan, but also on the likes of Russia and Uzbekistan for quite a large chunk of their fuel supply. I think that also what that's allowed to happen, particularly in the US, is almost the domestic industry in terms of the fuel cycle, both out the ground U3O8 enrichment and conversion, has pretty much stagnated over the last 30 years and is pretty much non-existent. I mean, in the US, for example, in the first quarter of this year, I think about 80,000 pounds was mined. That's on domestic requirements of about 40 million pounds, alone just this year. So ultimately, they really do need to look at how they can ramp that up. In terms of the geopolitical angle there, we've sort of studied various aspects of this, from sort of the issues around transport out of Kazakhstan via the Trans-Caspian, but also understanding that, in the last quarter, 75% of revenues of the state-owned or of Kazatomprom was from China. And this is at a time when China's just approved 11 new reactors. Another, well-documented large customer of theirs is Russia. Only this morning did I see news that they're looking at approving 34 new reactors by 2042. So, all of the sort of issues that they've spoken about around being able to ramp up production to 100% of their subsoil use agreements, I think that ultimately, they came out and said that because they had sufficient confidence in their contract book to do so. So to me, that says if you're going to guide down 17% like they did a couple of weeks ago, that some utility somewhere is going to fall short. Whether that's going to be a Western utility or a Chinese or a Russian utility, I'm not sure. But there are some indications from which assets are sort of operating at full capacity versus those that are not, that perhaps the sort of Western-aligned JVs are operating slightly below those of Russians. But the company has come out and said that this is to do with the efficiency of acid and the acid constraints that they had, which is obviously quite difficult for us to work out. But I do think that generally, the geopolitics, I think it's one of the most easily geopolitically weaponized commodities in the world because of how strategic it is to a lot of countries around the world. Again, in the US, 55% of their clean energy comes from nuclear power, and they just don't have a domestic fuel cycle to support that. So this reliance, and again, not just in Kazakhstan but also in Russia, this dates back to the sort of early 90s. This was a program which was looking at downblending Russian weapons-grade uranium to fuel pretty much their entire US fleet. So something has to give, but one of the key themes from the conference has been how long these sort of processes take, how much capital is required, and that sort of chicken and egg problem where you need to have that commitment from capital markets and also from the public sector to go out and spend the billions of dollars to bring this sort of fuel cycle back home again.
Yeah, it's amazing. You mentioned that Kazatomprom cut their guidance by 17%. There wasn't really much of a reaction, and if there is, we really haven't seen it yet. But I think if OPEC came out tomorrow and said we're going to cut our oil production by 17%, it would probably be up 10 or 20% in a relatively short period of time. Or even the U.S., if they're the world's largest oil producer, producing 15 million barrels a day, if they were to come out and said they were going to cut their production by 17%, oil would catch a serious bid. But we really haven't seen that with uranium.
No, I think that's part to do with the fact that if we look back to sort of this time last year, I think it was September 2023, when Kazatomprom came out and said they were planning to return to 100% of subsoil by 2025. I think that the market at the time was sort of skeptical of that. And I think that from the various sort of the 2023 annual report, and then also the first half of this year, I think that it was to an extent priced in that the 31,000 tons was not going to come out of Kazakhstan next year. And that's probably what contributed at least somewhat to that rally that we saw when we were sat here this time last year at maybe $60 up to the sort of January high of 106. So I do think that there was an element of it that was priced in. We saw uranium prices move sort of $3 on the day. And I don't think that in the physical market it's necessarily had the reaction that we expected. One thing that I know surprised us and surprised physical traders and commentators on the space was the inventory number. The inventory number's now fallen below that 6 to 7 months of attributable production threshold that they need to keep in order to sort of maintain baseline inventories and also make sure that they have that sort of buffer for any contracts that they're unable to fulfill. That's now fallen below that threshold for the first time, I think, since 2016. So I think that's something that people will closely be monitoring. And also, this was really meant to be a restocking year for Kazatomprom. Again, you know, they came out and they said that the contract book, the long-term contracts that they had been speaking to utilities about, gave them the confidence they needed to ramp up. So, you know, back to this original point, someone is inevitably going to feel the brunt of that, and I guess we'll find out in the next years who that is.
We've had production cuts from both Kazatomprom and Cameco in the past year. We have ongoing supply deficits. We have massive demand coming from China and many other countries. So wouldn't logic dictate that the uranium price should be a lot higher than $80 a pound, like 100 or 125?
Uh-huh.
So I guess my question to you is, why isn't the price significantly higher? We keep talking about this bullish story, and I think everybody would agree it is a very compelling story about why isn't the price higher?
Look, I think there's an element of we saw a very quick, fast move last year, and perhaps, you know, the market got slightly over its skis. I know that a lot of that ramp up sort of towards the end of last year was to do with trader activity as opposed to sort of fundamental sort of utility activity. I think also a contributor is the sort of lack of activity from the likes of Sprott. Again, if we were sat here 2 years ago, Sprott was sort of halfway through a £30 million procurement year, and that's obviously subdued slightly as a function, part to do with equity markets, but also, you know, the shares of the trust have not traded at a premium to NAV for a while. But on the supply side, story is so well told. The fragility of that supply side is so well told for all of the reasons that you mentioned, the largest suppliers in the world, seeing these sort of production cuts. You know, a large chunk of uranium that Europe specifically is reliant on, landlocked in Niger. It feels like this is, you know, I feel like the sort of next leg of this story is going to be what's going to happen to the demand side. And ultimately, that's what I think is going to drive prices much higher over the next few years. I think that, again, as is well documented, the data center story is something that's going to be a massive contributor to that. The number one threat, in my opinion, and in Ocean Wall's opinion, to the AI sort of revolution, to the AI race, is power, is that you need so much more power to power these data centers than we currently have. You can go out and you're a hyperscaler like Microsoft and Google and say, I'm going to build 50 new data centers in the US, but you now have to come with your own power solutions to that. And they have to meet your ESG criteria. They have to be carbon, you know, renewable, carbon zero carbon power. You know, Google, for example, have pledged that by 2030. It's looking very, very unlikely that's going to happen. So to your point around pricing, I think that we need a sort of maybe increasing signals from the demand side that we're going to need a lot more nuclear power, and also perhaps a solution. We were just listening to a talk around financing and the length of time it takes to fund nuclear projects and how long it takes to build. The sort of 5 and 5 rule people used this morning, which was 5 years over budget and 5 times the cost. That's something that's, you know, perhaps, you know, can hinder the demand side because we can't start to roll out these reactors perhaps at the speed of which, you know, at least not to say it everywhere. In China, they're sort of walking the walk and they're building these things at a rate of knots that we've never seen before. We need to apply that sort of copy and paste production line economics, maybe perhaps the promise of something like SMRs to that, in order to see demand go from 190, 200 million pounds a day up to much higher levels. The deficit, though, remains a factor today regardless. So we expect to see much higher prices, both in spot and term. And although the uranium price in terms of spot has retraced slightly, you know, the term price, I think, is now 26 consecutive months of moving higher or staying the same. That's real utility demand. That's not the job of financial speculators or traders. This is what utilities are willing to pay for uranium. This, to me, every time the term price ticks up, it's indicative of further utility uncertainty around future supply.
So we can't have a discussion on geopolitics without discussing Russia.
Mm-hmm.
It's very important when it comes to both enrichment and conversion services.
Mm-hmm.
Maybe you can speak to that and also speak to the risk element to U.S. utilities and anyone else who's relying on Russia for these services.
Absolutely. again, I mean, this goes back to the megatons to megawatts program that I mentioned in the early 90s. The US has built up this, this complete dependence pretty much on Russia, particularly in the conversion and enrichment space. And ultimately, you've got, your likes of Arana and Urenco here today talking about, they would love to look at expanding capacity and spend the billions of dollars that they need to expand enrichment capacity and conversion capacity. But you need to have clear signals from both the government and the utility that there's going to be a home for these pounds and for these kilograms of UF6 and EUP and fabrication. So I think, when you look at the geopolitics of uranium, there's an amazing book which I would urge all of your listeners to read by Marin Katusa called The Colder War. And there's an amazing chapter in that called The Putinization of Uranium. And it talks about, this need of, if you've got a huge domestic stockpiles, you can have warehouses full of U3O8, but it's completely irrelevant in terms of servicing the 99% of nuclear reactors. So, there needs to be a push, particularly in places like the US who are so reliant on nuclear power, to bring this industry back to life, to bring the fuel cycle back to the US, because they used to do it. So it's not a technological problem. It's purely about policy. And obviously we saw a large step towards that with the Russian ban earlier this year, which has now started to give utilities that sort of clarity into the future, into the next 5, 10, 15 years of who and where they can contract. And so I think that that's going to play a massive part. And I think that, as is well documented, term contract volumes are at quite low levels. But when you talk about conversion and enrichment, these things are up 500-600% in the last couple of years. The number one call that I got from clients of ours after Russia's invasion of Ukraine was, how do I get exposure to conversion and enrichment? And look, I know you guys, you look at the investing side of this, it's really difficult because this is pretty much dominated by state-owned enterprises. So, again, state-owned enterprises will work alongside the state, but they also need that sort of private sector incentive to get going. And ultimately, you need to have a clear indication that everything that you produce is going to have a home.
So, as you mentioned, both enrichment and conversion, they're both up significantly here in the last couple of years. Do you envision spot uranium making the same sort of move?
Yeah, I've always seen it as sort of that crystal ball. Eventually, you sort of have to trickle down, or eventually it will trickle down to spot uranium, U3O8. Again, people talk about, and I was having this conversation with someone yesterday, and I said, do you think that the US government will go out and continue this sort of purchase of EUP? And it was interesting that the US government sort of thought about it like, I'm going to go and buy some EUP without taking into consideration that you need to procure U3O8, UF6, and then you get your EUP. It's not a case of just going out there and buying your end enriched product towards the end. So yes, I really do think it's going to become a factor, because you have to go and there's a process by which you get to that enriched stage. So I think ultimately it has to trickle down to 308. I think we've seen that particularly over the last sort of 3 and 4 years, but it's nowhere near the levels that it should be. And I think that's going to ultimately be reflected in stuff like utility inventories, government inventories. And again, as a commentator on this space, it's really difficult to get. It's a very, very opaque market. China are not going to come out and release to you what the sort of strategic inventories are there. They have their Alashankou warehouse on the Chinese-Kazakh border, which has got a capacity of, I can't remember what it is, 19,000 tons, massive sort of capacity. But getting an idea really on government inventories is quite difficult.
Yes, and that's another interesting point, is the fact that China is so far ahead of the curve compared to everybody else. They just didn't do it with uranium. They did that with battery metals too. That's why they dominate lithium-ion batteries and the whole EV space. And so it's interesting to see them do the same thing with uranium, building up these massive stockpiles. And I can only surmise in 10 years from now, the West is going to be standing there looking pretty.
To be clear on this, I mean, the work that we've done is that if China were to meet their nuclear ambitions, they're going to require about 1.2 billion pounds of uranium. If I take a sort of wide range of estimates that I've seen, between 500 to 600 million pounds they currently have stored in China. These guys are, the Chinese are not in sale mode. They're not looking to sell out this uranium at higher prices or to have sort of a cap in terms of pricing. Again, one of the first things that I learned in this sector is that the marginal cost of uranium for a nuclear power plant is sort of 5, 6, 7%. So fuel buyers will pay $50, they'll pay $500, because the sort of cost gets passed down to the consumer, ultimately results in much, much higher energy prices. One of the things that we saw that saw uranium prices fall from sort of 82 post the Kazatomprom guidance downgrade down to about $78 was a Chinese trader unloading sort of 400,000, 500,000 pounds of uranium. And it sort of spooked the market a bit, which is, are the Chinese going to sell in the exact same way we saw the Japanese sell post-Fukushima? And there's that sort of feeling of that scar tissue among people in the, but both in capital markets, but also utilities and fuel buyers and producers, that this was going to be the same thing again. Are China going to unload this sort of huge stockpile of uranium? Every piece of work that we've done indicates no, they're going to be net buyers of uranium over the next 10 to 15 years. And this really speaks to the sort of the size of that nuclear growth strategy. They really are doing it in a way that's completely different to what we've seen before.
So let's talk about the term market. So far this year, somewhere between 40 to 50 million pounds has been contracted versus 160 million pounds last year. When you walk the floors, are you hearing any chatter about potential contracts coming up before the year end?
Yeah, I mean, look, if it's ever going to happen, it's this week, right? This is when producers, uranium producers, fuel producers come and they meet with their respective utilities, and this is when documents get signed. I think that we'll definitely see a ramp up towards year end. Whether we meet that 160, I'm not sure. And I think that something needs to be made really clear here, which is that utility demand of nuclear fuel is completely discretionary. There is no sort of clock where if you say to me, Ben, when a price is going to go much higher, for how long are they going to stay there, where are they going to go? It's so difficult to know that because it's so dependent around utility demand. And again, we have contracting seasons, which we're sort of entering now. But there's no sort of, there's no one forcing utilities to go out and contract at certain given prices. And again, as I just mentioned, they're not particularly price sensitive anyways. So, I think that we sort of end up in the remit of 120 to 140 million pounds contracted this year, which, as you mentioned, is going to leave us a pretty strong end to the year. We've seen, I think that, I can't remember what the exact number is, but, term prices are at $80. I don't know what the year-to-date performance is, but that's been on, as you mentioned, pretty small volume. If we saw another 80, 90 million pounds of contracting towards year end, there's no doubt in my mind that the term price ends up above $90 towards year end if we do see those kind of volumes. And I think that the spot market will, I think the spot price will probably follow suit.
Wow, so you're really bullish on the space if you're looking for that kind of demand going into year end.
I think so. I don't see any reason fundamentally why this sector should not have a massive few months.
I agree with you totally. Not just 3 months.
And beyond.
Future, yeah. Now, what about the equities? We've seen a lot of the equities pull back given that we've been in the spot price. How do you feel about the equities in here? Do you see good value?
When we were heading into the Kazatomprom guidance downgrade, we were sort of looking at the sector 30% off its highs pretty much across the board. So if we were going into that news off quite a high base, there would have been an element of, okay, is this priced in? It definitely doesn't feel like it at all, especially, I think that the one thing that has been completely, the sector has not had cash flows for so long. There was sort of 12-year uranium bear market where the sector was completely bereft of cash flows. What we're starting to see now in the various restarts is meaningful cash flows returning to the sector. And ultimately, there's sort of this snowball effect of you've got higher spot term prices. This incentivizes production to an extent, although, the supply side response has been sort of subdued, I think, more than any other commodity. But yeah, I think that ultimately term prices, spot prices towards year end going to be much higher, and that's going to have this sort of downstream impact on equities. We can still see equities are pretty pegged to what's happening in the underlying commodity price. In terms of where to allocate, having an allocation to physical, I think is always a good idea, especially with some of those with some of the uranium trusts like Yellowcake and Sprott, it's sort of double digit discounts to their net asset values. But then you've kind of got the sort of, the higher torque upside equity cases. I think, investing in North American jurisdiction uranium mines with good, quality assets, quality management teams is going to serve people really, really well.
Then as we wrap up, what is your message to investors who might be concerned with this recent pullback that we've seen in the uranium price?
I think that for people coming to it fresh, I would just say that this is the volatility of the sector. I was looking back at sort of previous pullbacks in this, particularly in the equity market. There's been 8 double-digit pullbacks since I started covering the sector 4 years ago. I've sort of put this down to another one of those, but we're coming off a much, much higher base today than we have before. Again, people like to use the 2007 sort of example. This is what happened then, this is what can happen now. Half the world hated nuclear power in 2007. We have bipartisan support in the Senate for nuclear power. We are seeing restarts, recommissionings. We're seeing nascent nuclear power strategies across Europe, the US, and Asia. We are seeing the most, traditionally anti-nuclear governments in the world completely U-turning on their nuclear strategies. There has never been a better time to invest in the nuclear sector, and the supply-demand fundamentals of uranium specifically. I don't think you can find a better story in commodity markets than you have in uranium.
Always good to finish on a strong note. Once again, Ben, thank you.
Thanks, Jimmy.